Picture a railway station in a Midwestern industrial city in late 1945. A young Army veteran steps down from the train, 24 years old, still in a uniform coat, carrying a duffel bag in one hand and his discharge papers in the other. His wife reaches him through the crowd. For a moment, the war is over and nothing else matters. Then the practical questions arrive. The factory where he worked is canceling wartime shifts. Their rented room is already crowded. College seems expensive. A bank has no reason to offer them easy credit. His regular military pay ends with his discharge. Final pay and a mustering out payment may give the household a little breathing room, but neither can finance several years of education, secure a mortgage, or carry a family through a long search for civilian work. What he may not yet understand is that Washington has already built a new system around exactly these problems. The law was passed before he came home because federal officials were afraid that waiting until millions of veterans were unemployed would be far too late. Today, the expectation feels familiar. Military service may lead to education benefits, job training, temporary income support, or a VA-backed home loan. Before 1944, the federal government already provided pensions, disability compensation, medical care, insurance, and vocational rehabilitation, especially for veterans who returned wounded. What did not exist was one broad package for millions of ordinary veterans that combined education, temporary unemployment assistance, job placement, and federally guaranteed credit. The hidden purpose of that package was not only gratitude, it was economic survival. The returning veteran therefore stands before several doors that earlier generations could rarely open at the same time. He can search for the first available factory job. He can delay entering a crowded labor market and train for something better. He can try to move his family out of a relative's house. He can approach a lender without arriving entirely alone. The central question of this story is how the federal government came to organize those choices before the war had even ended, and why one failed homecoming after the previous war haunted every decision. Before a national readjustment package existed, coming home from military service usually meant returning to whatever private world was waiting. A veteran went back to the same town, the same family network, the same farm, or the same trade if those things were still available. Federal responsibility concentrated heavily on wounds, disability, pensions, hospitals, and rehabilitation. An able-bodied veteran who survived intact was generally expected to resume civilian life through his own savings, relatives, former employer, and local community. Sometimes that private network worked. Sometimes the world he remembered no longer existed. World War I added important parts to the older system. The federal government expanded veterans insurance, hospital care, and vocational rehabilitation for disabled veterans whose injuries prevented a return to their former work. Those programs mattered enormously to the men who qualified. But they did not provide a broad college benefit, a national loan guarantee, or a temporary income bridge for the typical able-bodied veteran. A man could come home with honorable service, no serious wound, and no institution designed to help him reorganize education, work, housing, and family life as one connected transition. The economic grievance after World War I became especially sharp because civilian wages had often risen during the wartime boom, while military pay remained comparatively modest. In 1924, Congress responded with adjusted compensation certificates, a deferred bonus intended to make up part of that difference. The certificates were not ordinary pensions, and they were not immediately redeemable. Under the original law, most would not be payable in full until 1945. The government had acknowledged a debt to veterans, but it had scheduled a payment for a future that many families could not wait to reach. Then the Great Depression arrived. Veterans who were unemployed, hungry, and watching their families lose homes or savings knew that the government owed them money, yet the certificates still could not be collected in full. In 1932, thousands traveled to Washington to demand immediate payment. Many brought wives and children. They built camps of tents, scrap lumber, and improvised shelters near the Capitol and across the Anacostia River. The bonus army turned an abstract promise into a visible crowd of veterans asking why help scheduled for 1945 could not reach them during a national emergency. For weeks, the encampments remained within sight of the government debating their fate. When federal troops eventually cleared them, newspapers and newsreels carried the confrontation across the country. Not every World War I veteran joined the march, and the episode cannot explain every later policy decision by itself. Its political lesson was simpler. A promise delivered decades after the moment of need could become nearly useless to the household and disastrous to the government that made it. Congress authorized earlier payment in 1936, but the humiliation of 1932 was already fixed in national memory. By the time the United States entered another world war, policymakers understood the danger of waiting for a crisis after demobilization. They did not want returning veterans to discover, only after unemployment spread, that the country had prepared parades but no transition. A repeat of the bonus army would now involve a much larger generation, a larger press, and an economy converted more completely to war. The lesson was not that every veteran would become destitute. It was that millions returning in successive waves could overwhelm private employers, colleges, housing markets, and local relief systems before Washington had time to improvise. More than 16 million Americans served during World War II, although they did not all return at once, and did not all face the same circumstances. Demobilization came in waves. Even so, the scale was unprecedented. Factories had converted to military production. Women and black workers had entered industrial jobs from which many had previously been excluded. Families had crossed state lines to follow defense work. Entire cities had reorganized themselves around contracts for ships, aircraft, vehicles, weapons, uniforms, and ammunition. Peace would cancel those contracts far faster than the wartime economy had originally built them. Picture the same factory floor at two moments. During the war, every machine runs, the night shift is full, and production schedules stretch for months. After victory, a major contract disappears, one shift is dismissed, and the workers who remain know their own positions may be temporary. Veterans arrive at public employment offices, while civilian war workers are also trying to keep their jobs. The competition is not simply veteran against civilian. It is millions of households trying to find a place in an economy changing its purpose almost overnight. Housing created a second bottleneck. Civilian construction had been restricted during the war because lumber, steel, financing, and labor were directed toward military needs. Returning couples therefore moved into parents' homes, rented single rooms, or shared crowded apartments while they searched for something permanent. A job decision affected a housing decision. A housing decision affected whether education was possible. A veteran could not easily spend years in school if his family had nowhere stable to live, and he could not easily qualify for a mortgage if his civilian income had not yet begun. Government planners took the employment threat seriously enough to imagine a worst-case number. The Department of Labor at one point projected that as many as 15 million returning service members might be unemployed after demobilization. That was a wartime planning estimate, not a record of what later happened. Its importance lies in the fear it created. Washington was preparing for the possibility that canceled contracts, returning veterans, displaced war workers, and a severe housing shortage could combine into another depression just as the country was celebrating victory. The problem was therefore not simply how much money to give a veteran, it was how to control the timing of his return to the labor market. If millions needed a full-time job immediately, employers might not absorb them. If some could study, train, search more carefully, or begin a small business, the transition could spread across several years instead of several months. The policy challenge was to slow the collision without ordering veterans to remain idle and without turning the federal government into the direct employer, banker, school, and landlord for every returning family. A single cash bonus could provide relief, but it would not build skills, create college capacity, persuade banks to lend, or help a veteran choose a suitable job. The experience after World War I had shown that compensation alone could arrive at the wrong time and solve the wrong problem. Post-war planners began to argue for a readjustment system instead. The word mattered. Coming home was not one transaction. It was a sequence of decisions about work, education, health, family, credit, and place, each occurring on a different timetable. Education and training could delay entry into a crowded job market while improving future earning power. Temporary unemployment assistance could prevent a veteran from accepting the first available position simply because rent was due. A federal loan guarantee could reduce the risk faced by a private lender without requiring Washington to purchase every house or operate every bank. Employment counseling and medical services could address problems that cash could not. The new design would not guarantee a successful outcome. It would create several bridges so that one blocked path did not end the entire transition. The American Legion became the central organization assembling these ideas into one legislative package and pressing Congress to act before the war ended. Representative Edith Norse Rogers of Massachusetts, a longtime advocate for veterans, became one of the most important sponsors. President Franklin Roosevelt also supported broad readjustment assistance as his administration studied the economic consequences of demobilization. The resulting bill shifted the question from how much the government owed each veteran to how the risks of returning home could be shared among Washington, private lenders, schools, employers, and the veterans themselves. That shift in risk was the law's most important design choice. Under the older arrangement, the veteran absorbed almost everything first. If his former job disappeared, he lost the income. If a college rejected him, no alternative followed. If a bank considered him too risky, the housing plan ended. The proposed system would not remove those institutions, but it would change their incentives. Federal money could make education reachable. A weekly allowance could buy time. A guarantee could make a lender more willing to approve a loan. Public offices could connect benefits with actual job searches. The first major provision covered education and training. For qualifying veterans, the federal government would pay tuition and certain related costs and provide a subsistence allowance while the veteran studied. College was only one route. Vocational schools, apprenticeships, and on-the-job training were central parts of the plan because policymakers knew that most returning veterans would not follow the same path. The purpose was not to turn every soldier into a university graduate. It was to make several forms of useful civilian preparation financially possible when military service had interrupted the normal years for learning a trade or earning a degree. For the veteran at the kitchen table, this changed the meaning of time. A year spent in school no longer had to look like a year without income and without progress. Training could become part of the return home rather than a luxury postponed until the family was already secure. His wife could compare the immediate wage from a shrinking factory with the longer-term value of a technical program, an apprenticeship, or college. The law did not make that choice easy, but it made the choice real. Earlier generations had often returned to whatever work remained because no financed alternative existed. The second major provision offered temporary unemployment assistance. A qualifying unemployed veteran could receive up to $20 a week for as many as 52 weeks, a benefit later remembered as the 52-20 program. The maximum created political alarm because critics pictured healthy veterans choosing a full year of government payments over work. But the allowance was designed as a bridge through job search, not permanent income. Eligibility operated through public employment systems, and the veteran was expected to remain available for suitable work, rather than simply collect money with no connection to the labor market. The third major provision was the loan guarantee. The federal government did not hand veterans free houses and did not originally lend every dollar directly. A private lender still made the loan, the veteran still had to qualify under the program, find an acceptable property, and make monthly payments, and the lender still evaluated the transaction. What changed was that the government guaranteed part of the lender's risk, originally up to half of the loan, within a federal dollar limit. That promise could reduce the down payment barrier and make a marginal applicant more acceptable to a bank. The guarantee also extended beyond suburban houses. Eligible veterans could seek loans connected to farms and small businesses, recognizing that civilian readjustment might mean returning to agriculture, buying equipment, or becoming self-employed. The same mechanism applied. Private credit remained private, but a federal promise stood behind part of the risk. This was not charity disguised as a mortgage. It was a way to use government backing to unlock private capital for people whose recent financial history had been interrupted by military service rather than by irresponsibility. The remaining provisions connected veterans with employment counseling, public job placement, and expanded medical and hospital support. These services received less attention than college and housing, but they completed the logic of the package. A veteran might need help translating military experience into a civilian occupation, treatment for a health problem, or information about which training route fit the local economy. The system was meant to function as a set of connected options, not four unrelated gifts. Education, temporary income, credit, employment, and health support all addressed different stages of the same return. At the kitchen table, those legal categories became one family decision. The veteran and his wife could ask whether he should accept the next factory shift, enroll in a training program, search longer for work that used his skills, or approach a bank about a modest house. The household might use one benefit and never touch another. It might use education first and a loan years later. The law did not direct every veteran through the same doorway. Its achievement was that the returning family no longer faced only one doorway controlled entirely by the next employer willing to say yes. A package this broad looked likely to pass with overwhelming support, but one provision nearly broke it apart. The House and Senate agreed that returning veterans deserved substantial assistance. They disagreed over the unemployment allowance. Representative John Rankin of Mississippi became one of its fiercest opponents. He argued that paying able-bodied veterans while they were not working could weaken their desire to find employment. The criticism revived an old American suspicion that temporary income support would become a reward for idleness rather than a bridge back to productive work. Supporters answered that a veteran should have time to find the right civilian position instead of being forced into the first job available the morning after discharge. Military service had interrupted careers, education, apprenticeships, and family plans. A weekly payment of $20 did not create comfort, but it could prevent desperation from determining the next decade of a veteran's life. The dispute was not really about whether veterans deserved help. It was about what kind of help preserved independence, immediate pressure to accept work, or temporary space to make a better match. The disagreement reached a House Senate Conference Committee responsible for reconciling the two versions of the bill. The committee deadlocked. For a moment, the unemployment provision, and potentially the broader package built around it, was in danger. The crisis gave the legislation a human turning point. Representative John Gibson of Georgia was needed in Washington to help establish the necessary vote. He traveled from Georgia specifically to break the deadlock and support the broader Senate version that retained the unemployment allowance. Once the conference dispute was resolved, the full bill passed unanimously in both chambers. President Roosevelt signed the Servicemen's Readjustment Act on June 22, 1944, just over 2 weeks after the Allied landing in Normandy. The timing reveals the central logic. The war in Europe and the Pacific was still being fought, yet Congress had already decided that the homecoming could not be handled after the fact. The country was writing the civilian transition before it knew exactly when victory would arrive or how quickly millions of service members would return. Passing the law was easier than building the capacity required to deliver it. A statutory benefit did not create a college seat, a vocational school, a house, a willing lender, or an effective local employment office overnight. Veterans Administration offices had to process eligibility. States and schools had to approve training routes. Colleges had to make room. Banks had to understand the guarantee. Builders had to find land and materials. The law created claims to assistance, but those claims still had to travel through institutions that varied sharply in competence, capacity, and willingness. Eligibility also came with service and discharge requirements, deadlines, and approved uses. A veteran could not simply announce an intention to attend any institution and demand payment. The education route had to satisfy program rules. The loan still required an eligible purpose, acceptable property, and a private lender willing to complete the transaction. Unemployment assistance required qualification through the public system. The Servicemen's Readjustment Act created access to forms of support. It did not guarantee admission to a particular college, approval from a particular bank, a job in a preferred occupation, or a house in a preferred neighborhood. Those conditions made local gatekeepers enormously important. A federal law could authorize tuition, but a college controlled admission and capacity. Washington could guarantee part of a mortgage, but a lender decided whether to originate the loan, and an appraiser influenced which property counted as acceptable. A veteran could receive employment support, but the local economy determined whether suitable openings existed. The law changed the national floor beneath veterans, yet the practical value of that floor depended on the doors built above it. Some opened widely, others remained narrow or locked. Even with those limits, education and training expanded on a scale that surprised many institutions. Roughly 8 million veterans used some form of education or training benefit under the original program. National Archives figures describe about 2.3 million attending colleges and universities, about 3.5 million receiving schooling below the college level, and about 3.4 million participating in on-the-job training. Those categories can overlap because one veteran might use more than one route, so they should not be added as though every count represented a different person. The scale transformed campuses. Colleges accustomed to a smaller, younger, and more affluent student body suddenly received married veterans in their mid-20s, many with work histories, military experience, and children. Schools expanded classrooms, hired faculty, improvised housing, and adjusted schedules. The typical student no longer had to be an 18-year-old arriving directly from secondary school with family money behind him. The law did not create mass higher education by itself, but it accelerated a profound change in who could realistically imagine entering a college, trade school, or professional program. Education also performed the economic function that wartime planners had hoped it would. Every veteran studying or training was one fewer person demanding an immediate full-time civilian job during the most fragile stage of reconversion. That bought employers time to replace military contracts with civilian production and gave veterans time to acquire skills with value beyond the wartime factory. The benefit combined delay with investment. It did not merely keep people out of unemployment lines. It attempted to make the person entering the labor market later more productive than the person who would have entered immediately. The feared army of permanently idle veterans did not appear in the form critics imagined. Later Senate histories reported that nearly 5 million veterans used the unemployment allowance, but most did not collect the full 52 weeks. Average use was closer to 18 weeks. That result matters because it closes the argument at the center of the Congressional Fight. The benefit was used widely enough to matter, yet usually briefly enough to function as the temporary bridge supporters had described rather than the year-long retreat from work that opponents had predicted. The post-war economy also performed far better than the most alarming wartime projections. The estimate of 15 million unemployed veterans did not become reality. No single program deserves all the credit. Pent-up consumer demand, accumulated savings, civilian production, housing construction, population growth, and other policies all contributed to the transition. But the GI Bill helped spread the return across classrooms, training programs, job searches, business formation, and housing purchases. It reduced the need for every veteran to solve every problem through immediate competition for the same factory jobs. For the veteran from the railway station, the education benefit now becomes more than a legal provision. He can enter an approved technical program or college, while a subsistence allowance covers part of the household's living costs. The shrinking factory is no longer his only immediate option. That does not mean school is effortless. He still must qualify, enroll, study, and support a family on limited resources. The difference is that military service has opened a financed path toward a civilian identity that did not depend entirely on whether his former foreman still had a place for him. A year or two later, the same family may sit across from a private loan officer. The veteran brings proof that he is eligible for a federal guarantee behind part of the loan. Those papers are not collateral by themselves, and the government is not purchasing the house for him. The property and his ability to repay still matter, but the lender now faces less downside risk than it would have faced with an otherwise similar applicant. That change in the transaction can reduce the cash required at the beginning and turn a possible rejection into an approval. The loan program connected military service with private credit at a national scale. Millions of veterans eventually used VA-backed financing for homes, while others pursued farm or business loans. The effect spread beyond individual borrowers. New households bought furniture, appliances, automobiles, and building materials. Construction created jobs. Suburban communities expanded at city edges. A guaranteed loan did not automatically create a house, but millions of approved loans created reliable demand that builders and lenders could organize around. The readjustment program therefore influenced not only who owned property, but where post-war America grew. That growth is often remembered through images of nearly identical houses appearing on former farmland. The image is real, but the mechanism should not be simplified into free houses for veterans. Loan terms changed over time. Not every transaction required the same down payment, and not every veteran could or wanted to buy. The federal government guaranteed part of a private obligation. The borrower remained responsible for repayment. The transformative element was not a giveaway. It was the use of public backing to make long-term private credit available to a broader class of returning service members. The economic effect also depended on timing. A veteran who could rent briefly, train for a new occupation, receive temporary assistance, and seek a loan later did not need to compress every decision into the first week after discharge. The law allowed a household to build a sequence: income bridge, education or work, stable earnings, then housing or business credit. That sequence reduced the chance that one weak moment in the labor market would permanently determine the family's future. The program's most powerful benefit was often not the size of any single payment, but the order in which new possibilities became available. Yet the federal promise had to pass through American institutions that were still segregated and discriminatory. The statute did not state that black veterans were entitled to smaller benefits than white veterans. Formal eligibility, however, was only the beginning. Colleges controlled admissions and programs, banks controlled lending, appraisers influenced acceptable property, real estate agents controlled access to neighborhoods. Local officials administered employment and training routes. A national entitlement could therefore produce unequal outcomes when the channels carrying it were unequal before the veteran ever entered the office. Robert P. Madison's documented experience shows how that process worked at the level of one life. Madison served in the Army during World War II and returned intending to continue his architectural education through the new benefits. The federal law gave him a route to funded study, but institutions responsible for admission could still place racial barriers in front of that route. His Veterans History Project collection preserves the prejudice he encountered as he pursued architecture. He eventually built a major career, but the path demonstrates that entitlement on paper and usable opportunity were not the same thing. Madison's story should not be reduced to the claim that black veterans received nothing. Many used education, training, and loan benefits and built careers, businesses, and homes. The more accurate conclusion is that they often faced a narrower set of institutions through which to use the same formal benefit. Segregated colleges had limited seats and sometimes lacked the desired program. Discriminatory lenders, appraisal practices, and housing markets restricted where federally backed credit could operate. The law raised the floor, but local exclusion controlled how high many veterans could climb above it. The same problem appeared in employment. A veteran could receive counseling or training and still return to a labor market divided by race. A qualification gained through federal support did not force every employer to hire fairly. In housing, a federal guarantee did not force every bank to lend in every neighborhood or every seller to accept every buyer. The program's administrative structure relied heavily on existing schools, financial institutions, employers, and local markets. That structure made rapid nationwide delivery possible, but it also carried existing inequalities directly into the distribution of federal opportunity. Women veterans were formally eligible as well, but their use of the law unfolded inside a society that often treated military service, higher education, home finance, and family breadwinning as primarily male domains. Their experience deserves recognition without pretending it was identical to the experience of male veterans or reducing all women to one outcome. The broader point is the same. A benefit can be legally available while social expectations and institutional decisions shape how fully it can be used. The GI Bill expanded opportunity on a national scale without erasing the society through which that opportunity traveled. This unequal access does not cancel the law's enormous effects, and the law's enormous effects do not cancel the unequal access. Both facts belong in the same story. The program helped millions study, train, search for work, buy property, and begin businesses. It also distributed some of the most valuable post-war opportunities through institutions that denied equal treatment. The result was transformative without being universal. It widened the American middle class while allowing existing racial and social barriers to influence who entered that expansion most easily and who had to fight for the same benefit. The law also changed colleges, banks, builders, and employers because federal support created a new class of customers. Schools could expand because tuition payments followed veterans into approved programs. Lenders could design products around a federal guarantee. Builders could plan developments around large demand from young families. Employers gained workers with additional training. These institutions did not act only from patriotism. The program altered their financial incentives. Readjustment became a market as well as a benefit, and that helped explain how a federal law passed during wartime could reshape civilian institutions for decades. It would still be an overstatement to credit the GI Bill alone with the post-war boom. The United States emerged from the war with industrial capacity, household savings, pent-up demand, global economic advantages, and a rapidly growing population. Housing policy, highway construction, tax rules, union wages, private investment, and technological change also shaped the following decades. The GI Bill mattered because it connected millions of veterans to those broader forces. It helped households participate in expansion that might otherwise have remained beyond their immediate reach. The original 1944 law also should not be confused with the exact benefits veterans use today. Congress revised education and housing programs repeatedly after the Second World War, through the Korean War era, the Montgomery GI Bill, and later programs for post-September 11 service. Eligibility, payment structures, and benefit levels changed. The enduring idea was broader than any one version. Military service created a federal responsibility not only toward wounds and disability, but toward the transition back into civilian education, employment, credit, health, and family life. Returned to the railway platform in late 1945, the veteran still faces uncertainty. His former factory may not keep him. A college may not admit him. A lender may still refuse the loan. The law has not placed a house key, diploma, or permanent job in his duffel bag. What has changed is the number of realistic next steps. He can search for suitable work with temporary support. He can apply to an approved training or education program. He can later approach a private lender with a federal guarantee available behind part of the transaction. Before 1944, an able-bodied veteran's return depended primarily on the private world waiting at home. After the law, the federal government accepted part of the responsibility for organizing the transition. The veteran still carried the work, the debt, the examinations, the applications, and the risk of rejection. But he no longer carried every risk alone. Schools received federal tuition. Banks received federal backing. Public offices helped connect veterans with work. The country turned military service into eligibility for a sequence of civilian opportunities rather than a ceremonial thank you, followed by private uncertainty. The most important change was therefore not that every veteran became prosperous. It was that one difficult week after discharge no longer had to decide the entire future. Temporary assistance could create time. Education could create skill. A guarantee could create access to credit. Medical and employment services could address obstacles that money alone did not solve. By distributing the return across several routes and several years, the law reduced the danger that demobilization would become one vast rush toward too few jobs and too little housing. For some families, that sequence led from a crowded room to a classroom, from the classroom to a better occupation, and from stable earnings to a house. For others, it led to vocational training, a farm, a small business, or a shorter period of unemployment. For still others, discriminatory institutions narrowed or blocked the path that federal law appeared to open. The same statute could therefore produce mobility, frustration, opportunity, and exclusion depending on the school, bank, employer, neighborhood, and veteran standing at the point of delivery. That is the real meaning of 1944. America did not simply reward service with a collection of benefits. It recognized that bringing millions of people home was an economic operation as complicated as mobilizing them for war. The government tried to prevent one synchronized shock by financing several different civilian routes. The result helped transform education, credit, housing, and the labor market. It also revealed the limits of federal promises delivered through local institutions that did not treat every veteran equally. The country did not solve the problem of coming home with one signature. It built a bridge before the returning generation reached the river. The bridge was wide enough for millions to cross through schools, job searches, loans, training programs, and medical support, and strong enough to help prevent the collapse planners feared. But the entrances were not equally open. Some veterans walked directly onto it. Others had to fight through gates that the law itself had not removed. The GI Bill changed what America offered after service, while exposing how much opportunity still depended on who controlled the door.